Brian, why is it important to have a CPA who's also a registered investment advisor review your tax return?
Well, I've had that's really the crux of why I'm even doing what I'm doing. I was going to be a CPA my whole life, but my clients really wanted more. They wanted somebody that could integrate the CPA world, estate planning, trusts, real estate, all of that, with their investment world and the decisions around that. Now, a lot of people think, that when they have their tax return done by a CPA, that CPA is going to be pointing out opportunities and strategies that can help them. Most of the time, though, I think most people would agree their CPA prepares the tax return, and that's pretty much it. There's not much more to it. Conversely, they think that their investment advisor should be looking for tax savings opportunities, estate, trust, all that stuff, but they aren't licensed to provide that, and they're not going to get it there either. So how do we get these two worlds that should be working together in unison? How do we get them together? Well, my answer was, I'm going to do both. I'm going to be a partner of a CPA firm who owns a registered investment advisory firm. My advisors are going to be CPA advisors, and or they're going to be registered investment advisors who have full access to my CPA firm and all of the employees there to do the tax planning, work with them to come up with the best strategies. So you really can't count on your CPA knowing any of these strategies. They aren't licensed to give investment advice. They're prohibited from it. Conversely, registered investment advisors are often prohibited from giving income tax advice because they're not CPAs.
So it's the best of both worlds. Is a good analogy that a CPA, looking at a tax return is looking maybe through the rear window, but an RIA is looking through the windshield. I mean, not what has happened, but maybe trying to control what's going to happen.
Yeah, that is a distinction there, because most CPAs are focused on the past. They're trying to gather the information from last year to get it in the right places for this year. Now, some of them are also good planners, but again, they're probably not tied into the investment markets and products. If they're not a registered investment advisor, they're not going to be able to talk to you about fixed index annuity options, fixed index universal life, premium finance. Probably don't know anything about private non-traded REITs or Delaware statutory trusts, or on and on and on. So even the best CPAs, the people that are really good at preparing a Form 1040, don't always make the best financial planners because they're not licensed to be financial planners. A lot of people think CPAs are. They are not. That is not what that licensing is. And so we have to understand that there's a difference between being a CPA and RIA and the blending of the two.
Is it uncommon to find an RIA who is also a CPA like yourself?
Very uncommon. That's again, that's why we started the company here, because I didn't intend on being a registered investment advisor, but now I am, because that's what my clients needed, and we've grown substantially because of that. It is very uncommon. I rarely see that throughout the country. And even if you find somebody that maybe says, well, we have an accountant on staff. Oh, okay, do they do planning? Well, no, they prepare 1040s. Again, there's a big differentiation between a financial planning CPA and just a CPA that isn't a financial planner.
Have you had clients, or do you have a story of someone who has come to you who has used a CPA, and you find that really there were a lot of tax savings opportunities that they could have had that maybe they just weren't given the proper advice for?
Oh, absolutely. Because a lot of people go to their investment advisor and they get mutual funds picked out for them, and they think, okay, that's my financial planner. And I kind of, I don't see a lot of financial planning. The big difference, there's not going to be a huge difference in rate of return between their U.S. stock market mutual funds and my U.S. stock market exchange traded funds. We're going to have similar results probably across the board. But the differentiation could be, I remember one, she used a Section 1031 exchange on her investment real estate into Delaware statutory trusts, something hardly anybody even has ever heard about. We got 2 premium finance fixed index universal life policies for her, one for her own tax-free cash flow in her retirement, and one for a legacy put into an irrevocable life insurance trust. We also did, in a year where she had a big net operating loss, we were able to do a massive Roth conversion of her 401k plan into a Roth to grow permanently income tax free and pay no income tax in that year because of the net operating loss in that one particular year. We were able to double her estate exemption, her and her husband's, by suggesting an attorney to put in the credit shelter trust provisions and doubling the estate exemption. So I get on and on and on. None of this had to do with stock picking. This had to do with tax planning, estate planning, trust, real estate, different insurance products, leverage through the premium finance, all these different areas for people that want to integrate proper tax planning, estate planning with their investment advisory service.
Brian, thanks for telling us more about the importance of a CPA and RIA working together.